Ladies and gentlemen, good afternoon and a warm welcome to all participants to the quarterly update call of Star Housing Finance Limited. Star Housing Finance Limited has organized this call with an intent to share updates and discuss operational as well as financial highlights of the company for the period ending March 31st, 2024. On the call, we have the senior management comprising Mr. Ashish Jain, Managing Director, Mr. Kalpesh Dave, Chief Executive Officer, Mr. Nitesh Narayan, Chief Financial Officer, Mr. Anup Saxena, Chief Operating Officer of the company, along with Ms. Savli Mangle as an IR from AdFactor PR. Before we proceed with this call, I would now like to take this opportunity to remind everyone about the disclaimer related to this conference call. Today's discussion may be forward-looking in nature based on management's current beliefs and expectations. It must be viewed in conjunction with the risk that our business faces that could cause our future results, performance, or achievement to differ significantly from what may be expressed or implied by such forward-looking statements. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Without much further ado, I request Mr. Anup Saxena, Chief Operating Officer of the company, to address the participants. Thank you, and over to you, sir.
Thank you, Operator. A warm welcome, everyone, to the earnings call hosted by Star Housing Finance Limited for the fourth quarter and the full financial year ending March 31st, 2024. We are delighted to have you join us today as we review the operational and financial performance for quarter and year ended March 31st, 2024 of Star Housing Finance Limited, highlighting significant accomplishments and providing valuable insights for the year. Following the management remarks, we will be eager to address any questions from the participants. Let me introduce Star Housing Finance Limited, a dedicated retail home finance company committed to assisting first-time home buyers in semi-urban and rural areas wherein we operate. Our primary focus is on economically weaker section and low-income families aiming to fulfill their dreams of home ownership. We offer long-term housing finance solutions with fair terms to deserving families striving to uplift the bottom of the pyramid segment. Headquartered in Mumbai and listed on the main board of the Bombay Stock Exchange, we aim to transition to the National Stock Exchange platform, post all necessary approvals and compliances. Our network spans across Maharashtra, Madhya Pradesh, Gujarat, Rajasthan, the NCR, and Tamil Nadu, with over 24 physical locations. With a team of over 250 plus housing finance professionals specialized in the low-ticket housing finance space. Now coming to the performance for the period year ending March 31st, 2024, I wish to state the following points. Number 1, throughout the period, Star Housing Finance Limited extended housing finance assistance to a significant number of families from the economically weaker sections / low-income housing segment. Thanks to robust incremental disbursements, our asset under management have reached rupees 426 crores plus, marking 74% year-on-year growth. Number 2, our asset portfolio is predominantly retail and well diversified across the regions where we operate. The average incremental loan size stands at rupees 12 lakhs in semi-urban areas and 8 lakhs in rural regions. Number 3, as our portfolio expands, we maintain a focus on asset quality. The diligent credit and collection practice observed by our team in day-to-day operations have resulted in a portfolio at risk of 3.22% for accounts that are 0+ days past due. Number 4, our gross net performing assets and net non-performing assets ratios as of 31st March 2024 stands at 1.50% and 1.02%, respectively. Additionally, our provision coverage ratios remains robust at 43.60%. Number 5. We are committed to enhancing our operational capabilities through investment in human resources, branch infrastructure, and technology. We are currently in the process of deploying an upgraded version of our lending suite, which will offer enhanced functionalities to improve productivity and credit management processes. Number 6. We have expanded our presence to the northern region, particularly in the National Capital Region, that is NCR, recognizing its growth potential. Number 7. Our focus remains on scaling up our asset under management through both on-book lending and co-lending partnerships with our strategic collaborators. Number 8. Under the guidance of our Chief Financial Officer, Mr. Natesh Narayanan, Star Housing Finance Limited has successfully secured credit lines totaling approximately rupees 225 crores plus from various banks and financial institutions during the period. Our robust pipeline positions us well to support planned growth initiatives. We are delighted to announce significant growth achieved during the period, all the while upholding our dedication to quality standards. The recent capital infusion through warrants has further fortified our capitalization levels, and our robust liability pipeline continues to support our growth strategies. Amidst the expansion, our core focus remains on providing retail credit access to first-time and new-to-credit home buyers, empowering them to realize their dream of home ownership. With this, I now call upon our CFO, Mr. Natesh Narayan, to speak on the balance sheet, profit and loss, and financial ratios for the period ending March 31st, 2024. Thank you, and over to you, Natesh.
Thank you, Anu. Good afternoon to all, and a warm welcome to all of the participants. I'm delighted to announce that our focus on maintaining growth momentum while upholding the quality standards has led to robust financial performance during this period, ending March 2024. I'd like to extend my appreciation to our entire team for their dedicated efforts in laying a solid foundation for asset growth, particularly through our single-minded focus on building a liability franchise. As a result, we have established successful working relationship with 20 lenders, which includes 7 banks, both in the private sector as well as the public sector space. We have secured an incremental sanction amounting to 224 crores from these institutions in the last financial year. With undrawn limits and pending proposals in our pipeline, we are well positioned to scale up our operations, which will be in line with our planned growth trajectory. With this, now I come to the financial performance for the financial year ending March 31, 2024. They are as follows. The asset under management stood at 426.86 crores as of March 31, 2024, against 246 crores as of March 31, 2023, thus giving a year-on-year growth of 73.52%. Disbursement for the financial year 24 stood at 240.86 crores as against 207.51 crores. The total income for the financial year 24 is at 61.64 crores as against 37.24 in March 2023, a year-on-year growth of 65.52%. The net interest income in FY24 stood at 26.13 crores as against 21.06 in FY23. GNPA, I'm pleased to announce that GNPA as of March 31, 2024 has come down to 1.5% and NNPA is at 1.02%. For the period ending March 31, 2024, the PAT increased by 27.27% year-on-year. During this period, the company a total sanction of 224.42 crores, so 42 crores, of which 219.42 was disbursed. Total borrowings outstanding as on 31st March 2023 stands at 320.3 crores, thus giving us a leverage of 2.41 times. The company possesses a robust liability pipeline poised to support growth initiatives. I firmly believe that as a team, we will capitalize on our past accomplishments to reach business, financial, and operational goals that we have established for ourselves in the coming financial year. Now, I call upon our
We have the management line disconnected. Please wait for a moment while we reconnect them. We have the management back on the call.
I'm sorry for this small glitch. Now I call upon our CEO, Mr. Kalpesh Dave, to provide the concluding remarks. Thank you, and over to you, Kalpesh.
Thank you, Natesh. Hello, everybody. Operator, am I audible?
Yes, sir, you're audible.
Thank you so much. So on behalf of the Star HFL team, I extend a warm welcome to all our participants. I wish everybody on this call and all our stakeholders a very happy and successful new financial year 2024-25. May this new financial year bring more significant milestones to everybody over here. So the object of arranging these earnings calls regularly is to share updates on the company's progress as to how we are doing and what lies ahead of us. I will share some more points in addition to what my colleagues Anup and Natesh have spoken. So on the equity infusion front, the capitalization levels further strengthened during the last financial year through successful issuance of warrants amounting to rupees 60 crores, which has been subscribed by family office, HNI investors, and retail investors. As we speak, 25% of the total warrant amount has been received. Resultantly, the capitalization levels have gotten strengthened. Net worth as of March 31st, 2024 stands at 133.01 crores, and as mentioned by Natesh, leverage levels remain modest at 2.41x. In addition to what Anup shared on the AUM growth approach, happy to share that Star HFL has initiated a new co-lending partnership with Tata Housing Finance Limited, targeting assistance to 5,000 potential home buyers in its initial operational phase. Also, on the rating front, during the last financial year, Star HFL received a rating upgrade from CARE and is now rated as BBB stable by both its rating partners with India Ratings and CARE. So as we have grown, our leaders on ground have witnessed a lot of housewarming ceremonies of our customers. And this fills our heart with immense pride that we as an organization have started to play a meaningful role in home owning aspirations of these deserving borrowers as we are growing. Star HFL sees itself as a part of broader mortgage fraternity in retail low-ticket housing finance space. We, along with our peers, that includes banks, HFCs, financial institutions, credit societies, and others, have to work strength to strength to enable credit access and play our part in realizing our Honorable PM's dream of housing for all. On the business front, it is heartening to see the growth momentum being carried ahead well into the fag end of the financial year without compromising on the quality and overall framework as well as guidelines that we have laid for day-to-day operations. As we are growing, we are expanding to those areas where we do feel
that there is an addressable segment and we can develop a meaningful presence through our operations. And hence, we expanded to the newer geography of NCR in the last financial year. Our goal is to extend our presence into new territories, pending the requisite approval while adhering to our retail philosophy. I have consistently emphasized this in every communication, and I want to restate once again over here that prioritizing quality over growth remains paramount for us. Our commitment remains steadfast in cultivating a high-quality loan portfolio. With increasing levels of capital, the company aspires to transition to the National Stock Exchange, subject to all compliances, approvals, and qualifying criteria in place. We are poised to see optimum growth in AUM, and we have maintained comfortable capital adequacy ratio, courtesy equity infusion, and the liability franchise being built on top of that. Strong traction in liability, the pipeline so created, and consistent capital raise, including the recent one through warrants, gives us confidence to march ahead on asset side and grow the balance sheet. So in conclusion, we extend our heartfelt thanks to all our stakeholders, including the RBI, the National Housing Bank, our banking partners, our rating partners, our business associates, our 4,500 plus valued customers, dedicated staff of 250 plus fine HFC professionals with strong domain and their respective families. Each one of them have played, and we look forward them to play a crucial role in the development of the Star SFL franchise. As a committed and responsible lending organization, we are dedicated to creating value for all our stakeholders as we continue on our path to become a respectable housing finance institution. Thank you for your attention. Over to you, operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhanya Arora from JT Financial. Please go ahead.
Hi, sir. Am I audible?
Yes, you are.
Yeah. So, my question is on the geography. So, any new area of geography that we are looking to explore as the rural development is going fast?
So, in terms of expansion to newer geographies, as I mentioned, and Anup also mentioned that we expanded into the NCR region last financial year. And now the focus would be basically to penetrate deeper and deeper into our existing geographies. See, you have to understand that we are spread across the states of Maharashtra, Madhya Pradesh, Gujarat, Rajasthan, Tamil Nadu, and now NCR. So now the time is basically come to look within these geographies and find those fertile micro markets where we can kind of develop our portfolio and establish our branch network as we build up the AUM over there. So that will be the first focus to answer to your question. In relation to expansion to the newer geographies in this financial year, I think that is a call that we will take in the second half of the financial year once these newly established branches basically scale up, and we look to penetrate deeper into the existing geos that we have.
Okay, sir, and as you said that we are entering the NCR region also, so what's the reason for the same? Is the company seeing any high growth rate there?
So no, I mean, I'll tell you, the growth rate for the affordable housing finance company, I mean, there is a market out there, and same applies to NCR. When we are talking about NCR, we have established a branch in Ghaziabad, and Ghaziabad basically will be positioned as a hub to cater to the existing geographies of Meerut, Hapur, Bulandshahr, so on and so forth. So just to answer to your question, there is an addressable segment, in these geographies. We have started well. If we talk about incremental disbursements, now NCR basically contributes to around 10 to 15% of our incremental monthly disbursements. We look forward to build further presence over there so that the contribution basically comes up to 20%, from the NCR region. And that will basically help us to diversify geographically also, given that, bulk of our business is coming from the western geography that we speak right now. So, yeah, NCR is a critical cause in the overall view.
Okay. And so lastly, you said that we are also entering the South Indian market, right? So is the market size big enough to, address and to warrant the competition?
So, answer to your question, as I said in my speech also, so there are all the players, and we consider them as our peers. So there are banks, there are HFCs, there are NBFCs, there are rural cooperative banks, there are credit societies. All these have been there before Star Housing Finance was born, and they will continue to be there. But you have to understand that the opportunity size of this addressable segment of economically weaker section, low income group segment who wishes to become a first time home buyer is so huge that there is an opportunity to have a peaceful coexistence amongst all the players. And hence you will also understand and appreciate that the government of India has also been mulling to extend the Pradhan Mantri Awas Yojana. So a lot of work requires to be done in across the length and breadth of the country. So while competition is there, as I told you, there is the pie is so huge that we don't have to worry about how much we are going to do, and we are not really into the business of increasing market share, so on and so forth. We are only focused to grow our portfolio backed by a good asset quality. So that is the focus. And just to answer to your question that you have forayed into the southern geography, no, we have already been present through our branch in Chennai. We have only expanded in the last financial year by adding a couple of branches in addition to Chennai, which is Kanchipuram, Vellore, and Tolindi. So that is what we are doing. We are not expanding into any new state as such.
Okay, sir. Thank you. I'll join back to you.
Thank you.
Thank you. The next question is from the line of Vatsal Cheda from Nadan Ark Capital. Please go ahead.
Yeah, actually my question is related to portfolio construction. So
sorry to interrupt you, sir. Your voice is not clear. Can you come near to your mic and speak, please?
Yeah, can you hear me? Am I audible now?
Yes, sir. Please go ahead.
Yeah, so actually my question was more pertaining to the portfolio construction. So wanted to know what percentage of our borrowers are new to credit, and secondly, wanted to know what's the average household income of these borrowers.
Okay. So operator, I will take it. Yes. So operator, I'll take that. So to answer, so Vatsal, right? So Vatsal, to answer your question, approximately 50% of my portfolio, 50% of customers who are standing as of now in my portfolio are new to credit. Having said that, new to credit doesn't mean that these customers don't have a repayment track record. The fact of the matter is their repayment track record might not be available with TransUnion, but that can be available with CRIF or any other credit bureau for that matter. And if at all that is not available with formal credit rating, these customers do have a repayment history available with local money lenders, sort of. Right? So they do have a repayment habit in terms of formal as well as informal channels. So that is to answer your first question. As well as second question is concerned, what is typical household income for these borrowers? So typically we operate within the income, within the household income of starting from 15,000 to 50,000 household income range. Having said that, we operate on the leverage such as debt burden ratio, which is typically netting off business income minus household expenses, which comes as household income. And Star Housing Finance calculate equated monthly installment on the basis of household income of the customer. So I think that answers your question.
Yeah, that's answers. Thank you.
All right. Thank you.
Thank you. The next question is from the line of Umesh Mishra from Mindtree. Please go ahead.
Yeah, thank you, operator. Firstly, I would like to congratulate the management for such a wonderful result. I would like to ask a couple of questions. So one is, when you speak about portfolio at risk, what does that mean? And how is it different from GNPA? And my second question is, how do you see diversifying your borrowing profile in terms of lender and instrument? Thank you.
So on the portfolio at risk, if you wish to know, we normally, share our portfolio at risk with all our, stakeholders, because we feel that that is the right barometer of, sharing how asset quality is holding. So when we speak about portfolio at risk, it is any particular installment which is even 1 day past due. Okay, so let's say your installment is due today, and if the payment doesn't come, that means that that account has gone into basically overdue. And when we give the number of 3.22%, we talk about all those accounts which are even 1 day past due. So that percentage is 3.22%, and GNPA comes within that particular number. So when we say that portfolio at risk is 3.22%, and NPA is 1.50% GNPA, that means that out of 3.22%, the gross NPA is 1.5%. So that is the technicality I wish to tell you on that part of it in terms of our asset quality, because we feel that that is the right approach to consider how the asset is being working, how the loan is being built up on the quality front of it. On diversifying the liability profile, you have to understand that we have basically come a long way in terms of scaling up our overall liability pipeline. And I'm answering on behalf of my colleague Nitish, because he deserves to be applauded for this kind of a scale up which we have seen. Resultantly, the asset has been built up. We have diversified in terms of the lenders, the lender profile. Previously, it was only financial institutions who used to lend us. Now it is a mix of public sector banks, private sector banks, and financial institutions basically who are there, our lending partners. So that diversifying we have already done over the past 2 to 3 years. Second thing which I wanted to share with you is that we have diversified in terms of our instruments. So these banking partners will give you term loans, okay? And we have recently, successfully closed an NCD instrument. So non-convertible debentures is the first diversification that we have basically sought, that we have been successfully able to add to our overall liability franchise, which happened in the last financial year, subscribed by 2 financial institutions, and these NCDs are also listed on the exchange. So that is a diversification that we have achieved. As we go ahead, I think one more milestone of 500 crores of AUM beckons us. As we scale up, over a period of time, the liability also will be slowly opening up to us, and the other liability partners, which is like social impact funds, the international funds on the debt side of it, are slated to come based on the merit that we deserve. And my colleague Nitish and his team are diligently working towards that diversification. So that is what the action plan is on the liability franchise. I hope that answers your question.
For the answer. Yeah. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Suman Gupta from Star Housing Finance. Please go ahead.
Yeah, what is the maximum ticket size that you offer to the customers, and the average ticket size on the book?
So the maximum ticket size that we offer is 25 lakhs in the semi-urban and rural geography. That is the maximum ticket size that we offer. Bearing the areas which are basically very, very close to metros, where basically affordable houses also will be a bit higher in the value. There basically we move up to 35 lakhs, but not beyond that. But bulk of our maximum ticket size is 25 lakhs as we speak. Our average incremental ticket size, as mentioned by Anu, comes to around 12 lakhs in semi-urban and 8 lakhs in rural areas. And on the portfolio, it is at around 10 lakhs or so.
One more question. What is the ALM profile and what is the ideal leverage level you would want to maintain?
ALM profile, that is you want to answer, and leverage level?
Yeah. So on the ALM front, we have no mismatches up to 3 years whatsoever. So we are very adequately funded. We have a reasonably good liquidity position which will fund our growth. Our repayments take care of our payments to our lenders. As regards the ideal leverage level, in light of the current balance sheet size and the rating, I guess the market looks at a 3 to 3.5 times is something which should be the ideal leverage level. Hope I answered your question.
We have disconnected the participant line. We will move on to the next participant. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Vimal Sharma, who is an individual investor. Please go ahead.
Thank you, operator. My question is you. What is the general GDP?
Sorry to interrupt you, sir. Your voice is not clear. Can you please use your hand?
Am I audible now?
Yes, you're audible.
Those are my questions. I have a couple of questions. What is the geographical split of your area? How do you see the shaping of this appeal to AUM growth? And how do you see the branch expansion in the current year? Any monthly disbursal? Thank you.
So I'll answer that question. On the overall AUM split region-wise, Maharashtra, is the bulk of the overall region. Overall AUM, it stands at around 60 to 63 odd%. So that is, the bulk of the AUM coming from, followed by MP and Rajasthan, which are at around 12 to 13 odd% each as we speak, followed by Tamil Nadu and Gujarat, which are at around 5 odd% each. And as I said, that NCR has started building up its presence. So now NCR kind of contributes to around 2 to 3% of our overall portfolio. And as I mentioned before also, that the new geography of NCR over a period of time should build up in double digits as we scale up in the current financial year. That is on the overall geographical spread. How we want to shape up our overall AUM as we speak, I think that geographical diversification of the overall AUM is due. It should happen because we have focused on opening new branches in the geos which basically are right now not having that much of contribution. So Maharashtra will be rationalized in terms of number of new branches getting opened up in the current financial year, and we will basically reinforce more in the geos of Madhya Pradesh, Rajasthan, Gujarat and Tamil Nadu in addition to NCR. So that's how the diversification will happen as we speak. And on the branch expansion, I've already mentioned that one new geo has already been added in the last financial year, and that too added in the second half of FY2023-24. So in the first half of 24-25, I don't see us expanding into any new territory as such. However, we will continue to expand into our existing geographies where we are operational, and then we will take a call in around October or November which are the new geos we want to expand to. There are 3 to 4 geographies which we are interested in. Just to tell you, Chhattisgarh is one of them. That is one particular geography where we are looking forward to. We are looking forward to basically have more presence in the adjoining areas of NCR. The UP, Uttar Pradesh is something that we are focusing on. And at the same time, one more location down south, either Andhra Pradesh or Telangana, where we will be looking forward to open up. But see, it all depends on how the AUM is getting scaled up, how the capacity is getting utilized. The current branch network has a capacity of around 30 to 35 crores of monthly disbursals. Currently, we are clocking at 20 to 25 crores. So once we cross that critical mass of 30 crores sustainably for the period of, let's say, 2 months or so, then we will basically focus on expanding into the newer geography. I hope that answers your question.
Yes, thank you. All the best.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask questions. The next question is from the line of Amol Doshi, who is an individual investor. Please go ahead.
My question is to the management. First, when do you see the next rating upgrading take place, and what are the parameters for it?
Natesh?
Yeah. So as far as the rating, we just got upgraded in the last financial year, that is the year ending March 2024. So given our size and the growth that we have, growth trajectory that we are on, we are quite hopeful that we'll be able to convince our rating partners for a upgradation to BBB plus over the next 6 to 9 months time.
Okay.
As regards the parameters, while no one exclusively no specific exclusive specifications are given, but if you see the broad trends, a BBB plus rated housing finance company is typically a company with a 700 crore plus kind of AUM with a NAV GNPA profile of under 1.5%, a net worth of 120 to 130 crores, and profit making in this HFC is what the broad trends look like. So while we meet most of the criteria, the AUM, given the growth trajectory, the AUM criteria will also be close to that number during that period, and then thereafter we may reach out to our partners and try to convince them to take a fresh look at our rating at that point in time.
Okay. I have one more question.
Sure.
What is the average loan to value ratio at the time of the organization and on portfolio?
So Natesh, I'll take that.
Yeah.
So my average loan to value ratio at the time of origination is typically, the maximum loan to value I offer is typically 75% at the time of origination. Having said that, while if you look at my portfolio cut, then at my portfolio cut, maximum contribution towards portfolio is coming through self-construction cases, wherein loan to value is relatively lower as compared to loan to value with other products. So at portfolio level, my loan to value is about 52 to 53%.
Okay.
In typical sense, if in layman terms, if my portfolio standards 426 crores, then typically around 800 crores residential houses are there which are mortgaged to us against 426 crores AUM.
Okay. Yeah. That's it.
Hope that answers the question. Yeah.
Yes, it answers. Thank you.
Thank you. The next question is from the line of Ashish Kumar, who is an individual investor. Please go ahead.
Hello. Thank you for the update. My question is, how much of the book is through co-lending, and how do you see the corporation in future?
So Natesh, I'll take that also. So as of now, my at portfolio level, my book is standing around 8-10% book is coming through co-lending book, and 90% book is of own book. While having said that, we wish to have around 15 to 20% book through co-lending relationship, and 85 to 80% book is generating through own book. That is our wish list for now. I hope that answers the question.
Thank you.
Yeah, okay.
Thank you. The next question is from the line of Ankit Redkar, who is an individual investor. Please go ahead.
Thank you for the opportunity. Just wanted to understand a few questions. Sir, my first question question will be regarding the AUM. What are our long-term projection, and can we expect the sustainable growth in the OM?
Long-term projection you are talking about, you're asking?
Yes.
So see, being a listed company, I cannot give you a forward-looking statement, over here. But see, you have to understand how we have grown. We have grown around 100% plus in the last financial year. That has been, that momentum has been maintained because now the base has been built up. The last financial year we ended up at growing at around 75% plus. Okay. So if you consider this kind of a growth rate, I think over the next 36 to 48 months, now subject to availability of capital being infused, the debt being raised, and other parameters being done, the macro and microeconomic parameters favoring, I think we are well poised to have a book of around 2,000 crores plus. And again, I don't want to speak in terms of AUM in the amount wise. We always think in terms of how many files basically we will be processing. So I think in this journey, incrementally from here on, we should be catering to around 20,000 plus first-time home buyers. Out of the 40,000 plus home buyers who basically will be coming at the logging stage to us. So that is something which this team is capable of. This team has that particular right kind of domain and technical know-how to steer growth over the next 36 to 48 months as we speak. And if we are able to achieve that, obviously the resultant value will be created for all of our stakeholders. So that's the best that I can share with you in terms of our overall projections on the AUM side of it. And for achieving that thing, obviously the branch expansion has to happen. We will have to venture out, from our familiar territories into the newer territories. And in that process, Star Housing Finance will be well poised to become a pan-India present housing finance company in affordable housing finance space.
Okay. Got it. And sir, my second question, as company has effectively managed its gross NPA and net NPA compared to its peers in the industry. So just wanted to understand which are the factors contributing to our efficiency?
Very good question. And see, in our every interaction with all of our stakeholders, we always say that we are credit and collection oriented company. We do feel that 99% of housing finance, not to put any other function down, is 99% is credit and collection, because it is very easy to lend money. Okay, it's very difficult to decide whom to lend, what to lend, how much to lend, and obviously collecting that money. So what we have done right from the beginning is that of these 4,500 plus live loan accounts, we have made a man-to-man marking across all our branches. That is the first thing that we have done. Any new branch that we open up, the first thing that we take is credit and collection person. Okay. So right from the day one, there is a focus on maintaining this asset quality in terms of portfolio risk that I mentioned before. So that is the first thing that we do. Second thing, we have ensured that all the customers basically get converted themselves into registered for the ACA. That is the first thing that we do. So we get exact idea on 10th of every month that this is our bounce percentage, and based on that bounce percentage, there are daily calls that happen right in the morning, wherein we only speak about the collection numbers and how it is going to be paid. So that is the dedicated effort day in, day out that we do has resulted in this. I'm not saying that we are the best or we basically can chest beat ourselves. The book is yet to get seasoned. So one more year down the line, I can definitely say that we are really doing good. But very happy with what we have achieved till now, given the customer segment in which we operate.
Okay. Got it, sir. Thank you so much. This is from my side.
Thank you.
Thank you. The next question is from the line of Venkatesh Krishnan from Rockfort Fine Club. Please go ahead.
Yeah. Can you hear me?
Yes, sir, we can hear you.
Yeah. Two questions I want to ask. One is, how do you plan to divide your borrowing, whether it be loan versus NCDs? How much NCDs you are planning to do current financial year? And second two is that as far as your liabilities, whenever you doing co-lending versus normal lending, considering that there are some concerns raised by RBI on co-lending, whether you are going to still concentrate more on co-lending or normal lending? These two questions I want to ask. Thank you.
Rakesh and Anup. I'll take the first one. So while we debuted on the NCD market this financial year with two separate issues that totals to around nearly 31 crores, we expect, currently it's about 9% of our overall borrowing. We expect to maintain this on our expanded borrowing book for this year. So I guess for this year we should have not more than 10% of our overall borrowing coming from NCD, subject to, of course, criteria in terms of rates, tenors are met as per the necessity of the book, which will keep the cost of borrowing low. But yes, NCDs will be a very important part of our borrowing liability franchise rather. Anup, on the second part, would you want to take that?
Yes, sure. Thank you, Rakesh. So to answer the second question is, co-lending is an arrangement which has been allowed by Reserve Bank of India. And Reserve Bank of India has specifically allowed two types of co-lendings, which is typically one CLM1 model and second is CLM2 model. Whatever is allowed within the parameters of what has been stated by Reserve Bank of India, if one lender is following all the parameters, I don't think there is any risk into that. We, as a responsible lending institution, whatever co-lending we are doing is we are doing typically under CLM2 model, wherein all the gist of CLM2 model has been followed. Whatever is written in the circular, that has been followed with all heart, soul, and gist. So that is to answer your question. I don't think that until unless we are not violating what is written in that co-lending circular, till the time there is any issue, there is prevailing practices in the market which are against those circular, which is typically FLDG is one of those practices, if I understood it right. We as a responsible institution has never gone into any sort of arrangement which is not defined or allowed by the regulator. We are someone who always like to play within the parameters of whatever regulator has said. So I don't see any challenge while doing more into co-lending. Having said that, since it do have its own permutation and combination, that was the reason I specifically stated that typically we wish to grow from 10% to 15% and at max 20% at portfolio level, but not more than that probably. I think that answers the question.
Thanks. That answers the question. That my worry was that there was slight concern showed by RBI on co-lending. So I do expect some kind of a restrictions may come in post-election. That's why I asked this question. Thank you so much.
Maybe, sir. But till the time we are following whatever is written in the guidelines, I don't see there are any challenges.
Thank you.
All right. Thank you, sir.
Thank you. I now hand the conference over to Mr. Kalpesh Dave, Chief Executive Officer, for closing comments.
So on behalf of Star Housing Finance Limited, I thank everybody for attending FY2023-24 earnings call. You are our valued stakeholders. Please, continue to follow us, continue to track us. If you have any questions, even after the call, you can get in touch with the investor relations team. We will be more than happy to talk to you or meet you in person to discuss and share, what are the plans ahead and how we are performing. So in case of any further queries, please do get in touch with the Star Investor Relations desk. Thank you and take care. Bye.
On behalf of Research Byte Corporate Service, that concludes this conference. Thank you for joining us, and you may now disconnect.